last Tuesday we were here. Last Tuesday we talked about that everything is still bullish, especially in terms of the two things. Last week we talked about the volatility here and also the magnitude to the downside, considered as a pullback. These two things alone, if we compare to the past, so it's a lot better. We don't have excessive volatility, which is a great thing for the bull. And on top of that, look at how shallow is the pullback. That is two very important points. And on top of that, we also have a very low supply. So suggest that there's still no threatening supply coming out at the moment, but you can definitely see that after that. Let's focus on last week. We got this bar on Wednesday. I believe that's a CPI bar reacting that comes with bearish spread, increasing of the supply, and on Friday as well here. This is the bar that comes with increasing supply, but not so much results to the downside. How do we interpret that? Okay, so on Tuesday, it's like a doji with the market is waiting for something, which is most likely the CPI on Wednesday. So on Wednesday, market doesn't react positively. We got rejection tail right here. There's a attempt to break out initially, but got rejected after. And eventually it closed near the low. So not a good thing, not that positive. But in terms of the spread, is not as threatening as like before. We got this huge bearish spread, or even this bar or this bar. This is bearish, but not that excessive. So not as scary. And look at the supply. Although there's increase of the supply, how's the supply look like compared to the past? So if we compare to here, this is the supply. I'll still say that it's lower. Supply is still lower than before here. Or if we compare to somewhere around here, it is definitely lower because let's do this, definitely lower. So supply is just a localized increase. So if we compare to the past few bars here, low volatility bars, there's localized increase. But in terms of the big picture or compared to the past downswing here or here, we still have a decreasing of the supply, slightly lower of the supply. So it's just a localized increase of the supply. On most importantly, next bar on Thursday is just reverse everything. That comes with also maybe slight decrease compared to here, almost similar or slight increase. Not that excessive in terms of the volume, but look at the spreads. It just reversed immediately. If the market was so bearish, this is really a chance for the bear to jump out or at least have a reaction, create a lower low. So if the market is that bearish, this is what market should do because you got an increase of the supply, you got a bearish bar, you got a bearish momentum, but none of that happened. There's no continuation to the downside. So instead, what we have here is a bullish bar, almost like reverse everything close at a high, very constructive. On Friday, although we got this sort of the similar kind of the volume, but look at the spread. There are rejection on both sides, rejection on top, rejection at the bottom. There's some demand here, there's some supply right here, while it's attempt to break out. I classify this sort of action as the supply absorption. Means that the market's attempt to break out, so S&P attempt to break out right here, draw some supply, and then eventually push it down. This is how much the supply. Next bar is reverse, and then have another attempt to rally that comes with also increasing of the supply. But do we get any downward results? Not really. Got a little bit right here, but eventually we close in the middle. It's like a dragonfly or the long leg doji. At the moment, we got a low right here, higher low right here. Yesterday was higher low. Higher low throughout for at least these three bars. That is the signs of the supply absorption pending a breakout to the upside, which is happening right now. Although it's still too early to tell because the market is not yet open, 9:30 p.m. my time zone. So it still have around 1.5 hours to go. But if we see this sort of the action that suggested that it's time to break out. Okay, so if there's a breakout happen, I would bet on more upside ahead and it's likely to break above 4200 and to attempt to test this resistance, which is somewhere around 43. If I use my mouse, is somewhere around 4260 all the way to about 4290, just below 4300. So we should see some kind of a reaction of that area, 4260 to 4290, very close to 4300, which is the previous swing high level. At the moment, I am bullish and we're likely to see the breakout happening today. And it's important that we have this kind of the breakout, at least to the upside. And with ideally, I want to see the increasing of the volume, but not that excessive. Slight increase of the volume that is enough. And if we can close above the previous swing high right here, means I think is 4200. If we can close above 4200, that will be very positive for the market. That is the S&P 500. So if you want to find out like what sort of the bearish scenario that we can seek out from here, what if the breakout fail? There's a what if there. We always want to consider that if the breakout fail, we also want to see how is the failure look like. If it is something like a rejection tail and then eventually close on the low, something like this, inverted hammer, rising star, or shooting star, and with slight increase of the volume, then likely that we going to see more consolidation, because at the moment, this is a small trading range that we are building at this moment. This is the trading range that S&P 500 need to break out. And then, of course, if we see the breakout happening right here, then likely is going to break above the 4200 level. This is the previous resistance level. That is S&P 500. Short term, bullish. Long term, I talk about the trading range, still within this trading range. The swing is still up. Immediate direction is still up. Long term, trading range. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.